The 1-minute daily forex trading strategy is a scaling system used to trade the major currency pairs. One of the major advantages of this trading strategy would be that it uses two momentum indicators to determine the general direction for the day and the strength of the trend. Trading the 1-minute time frame is not suitable for everyone unless you're a very short-term trader that can exercise a high level of discipline and self-control. This strategy works solely off of the parabolic SAR and the RSI indicators, which are momentum indicators, and has proven to be one of the most effective and reliable trading strategies for traders. The 1-minute daily forex trading strategy recommended parabolic SAR indicator settings. The parabolic SAR is a technical indicator and a great tool used to determine the immediate short-term momentum of any currency pair. Since the parabolic SAR indicator is applied to the 1-minute chart, the preferred settings are as follows. The RSI, Relative Strength Index, which is another momentum indicator, is going to use a bigger sample of candles in its calculation. Otherwise, because we're trading on such a low time frame, we'll get a lot of false signals. In this regard, the preferred settings for the RSI indicator is 20 period. The 1-minute daily forex trading strategy, buy/sell trading rules. When applied correctly, the 1-minute forex trading strategy should be profitable almost every day, but you aren't going to win every single trade. But what is important here is that you're going to have net profits at the end of the day. You have to have some experience with it and patience, but you also need to know when to pull the trigger. And going forward, I'm going to go through the steps of confirmation and what we need to understand to successfully trade using this strategy. Without further ado, these are the buy and sell trading rules of the 1-minute daily forex trading strategy. As an alternative, your stop loss can also be trailed above and below the parabolic SAR if you want to be more conservative and protect your trades. The 1-minute daily forex trading strategy, long and short trade examples. In figure 1 we have the year/used 1-minute chart, and a long trading opportunity is presented. By waiting to have confirmation from both indicators, we enter at the most favorable time, right when the momentum is about to burst. One major conclusion we can draw from the last trade example is that by using two momentum indicators, parabolic SAR and RSI, the 1-minute strategy will not generate many signals when we have ranging conditions, as the two indicators complement each other. Scalping involves trading to profit from small price changes within the 1 to 15 minutes time frame, with the aim of accumulating as many small profits as possible into a cumulatively large profit. Some traders prefer to trade forex pairs on the 1 minutes, 60 seconds time frame, where they can capitalize and profit from relatively small price movements of the 1 minute's chart. Every day has 1,440 minutes and total trading minutes of 1,170 to extract enormous amounts of pips each day from the forex market. Why scalp the 1-minute chart? In the following lines, we'll cover a simple yet effective forex scalping strategy on the 1-minute time frame. This strategy is based on both trend following and mean reversing, which lowers the number of false signals to a minimum. Still, you need to apply strict risk management rules and only risk a small part of your trading account if you want to become successful in the long run. You can use this trading strategy around the clock, but the best results are usually generated during volatile market conditions. That's why I recommend to make the bulk of your scalping trades during the New York-London session overlap. These few hours, from 8 a.m. to 12 p.m. EST, offer the lowest trading costs and highest liquidity, which is very important to scalpers. Also, most U.S. market reports are released early in the New York session, creating market volatility and increasing the profit potential of your trades. The strategy uses two moving averages and one oscillator. Here are the indicators and their setting that you need to apply to your chart. Strategy overview. Let's take a look at the three main steps of our 1-minute forex scalping strategy. Step 1. Identify the short-term trend. The two moving averages are used to identify the current trend in the 1-minute time frame. The 50-period EMA calculates the average price of the past 50 minutes, while the 100-period EMA calculates the average price of the past 100 minutes. The 50-period EMA is faster than the 100-period EMA, which means that it reacts to price changes more quickly. If the faster 50-period EMA crosses above the slower 100-period EMA, this reflects that average prices are starting to rise and that an uptrend is likely to establish. Similarly, a cross of the 50-period EMA below the 100-period EMA signals that average prices start to drop and that a short-term downtrend is about to form. We'll only